kiss the rain. Ice runs in my veins, won't play it safe. I don't belong with your nobility. Who died and made you king of anything? You think that I'm insane, it's your mistake. Kingdoms rise and fall, I've come to take it all. I'll take it, I've come to take it. Kingdoms rise and fall, I've come to take it all. I'll take it all. Storm is coming, so you better start running. No, you can't control, feel it in my bones. I'm coming for the, coming for the. I'm coming for the throne. I'm coming for the throne.
Let's go. Yo, I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it, fuse like a magnet. Lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back. Never gonna look back. Cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change. Slowly take a step today. I will never be the same. Cause that's what it takes.
right, guys, let me get on the right screen here. There we go. Go Beyond. We got the BYND Q3 earnings call. The results were actually announced yesterday. The call from management is going to be in about 10 minutes. And I know many of you, like me, are curious what they have to say. Happy Tuesday. Hope you all have been having a good week. Hope you had a great weekend. Haven't talked to y'all in a few days. Wow, the BYND results. First of all, I don't own the stock. I traded the stock for a couple days many weeks ago when it was running up, and then we exited the trade. But I love paying attention to unique situations like going on with all the corporate actions here, and especially I love paying attention when there's so much misinformation being foisted upon myself and you guys by social media. These people that are relentless keyboard warriors, they sound very convincing and they tweet non-stop all day, just incorrect information. And look what it does. It convinces people not to sell at $8 and to hold all the way down to $1.20. Man, it's unfortunate, but it is what it is. I'll still be here giving you the no nonsense skinny on how I'm looking at the financials and the filings. And when we see a trade, I'll tell you, hey, I think there's an opportunity here, at least for me. I'm pretty cautious, so it's got to be a really good setup. If it's a pretty shaky company like this, it's got to be a pretty good setup for me. Yeah, Jack Max, it was October 18th, Saturday is when we talked about the trade. I got in Monday in pre-market on the 20th, and the play was over by October 22nd. It lasted 3 days. And since then, it's just been a continual barrage of misinformation. And I really want to ask, and I want you guys to ask, who is responsible for pushing that misinformation? The bondholders had a bunch of new shares given to them that they needed to sell. That's my first suspect. 316 million shares that these bondholders received, and they needed to dump them. They weren't going to take a bath. So, hey, drum up a little social media campaign. Support a couple of loud voices with a bunch of bot accounts and run that puppy up. Oh yeah, we'll sell for 1,000% run up. Thank you very much. And on top of that, we found out in the results yesterday that were posted that BYND sold another 58 million on top of that. On top of what they gave to the bondholders. I don't know if you guys saw these notes. In addition, it says after the quarter ended, the company sold 59 million shares. So you wonder where was all the selling pressure coming from? Was it the shorts? 59 million was the company. And I would wager that 316 million of bondholders sold all their shares too. I don't have any evidence of that yet, but that's going to be my wager. And they all say thank you. Thank you for bailing them out and buying that thing, bidding it up. The good news for Beyond Me is in selling that 59 million extra shares. By the way, the share count is now 452 million. Float, 456 million outstanding. With that new 59 million. I don't know, maybe y'all can't see this. Let me kind of had it blocked there. This is the new float and the new shares outstanding. Beyond Me thanks you. They thank you for your service, being the ones buying up those shares. But I put out a video. Hey, maybe there will be a trade here where we can get a company that's on the verge of a turnaround and has fixed their balance sheet. Maybe we can get a trade here at some point. I'm not at that point yet at $1.20. And my reasoning is very simple, and you don't have to agree with my reasoning. It's okay if you don't. My reasoning is there is a shareholders meeting on November 19th. And proposal 5 is all day today. I get barraged on X. Beyond Meat, the best investment ever, and there's never going to be a reverse split. I'm like, literally, have you looked at the proxy? What do you mean there's never going to be a reverse split? There's 2 proposals on there, 2 different ways that they could split the stock from, I don't know, they have like 60 different ways that they might split it up to 150, one for 150. It's definitely going to reverse split. You should have zero doubt in your mind. What is with these bot accounts that just unabashedly, unashamed, put out misinformation? I don't get it, but it fascinates me. I don't know if you guys are fascinated by it. It fascinates me. And even more fascinating is the amount of people that fall for it. It's sad. It's disturbing. And then they want to argue with me. You don't know what you're talking about. Maybe you should do a little more DD. Learn to read, Tony. Okay. As if I'm not sitting here doing that all day. I'm not just reading somebody's tweet and then retweeting. I actually do my own work. Cage Free says, if you have Webull, can you go into the news feed and take a look for yourself at the monstrous amount of FUD articles on BYND? FUD like fake information pushing the company, or FUD like trying to scare people out of the trade? I mean, both would not surprise me. Of course, there are shorts attacking this stock, of course, and they're going to push negative articles, but they're also not wrong. The company announced also, in addition to the 58 extra million shares, they announced that in the fourth quarter down here, that net revenues are going to fall to between 60 and 65 million. I mean, if you thought 70 million, the reduction to 70 million was bad, it's going to be worse in fourth quarter. They're already telling you that right now in yesterday's press release. So, I mean, we need to give BYND Meat a couple of quarters. They're working on fixing the balance sheet. They're working on these new deals. There's a vote that will bake in more dilution and a reverse split. That is definitely going to happen. There's zero doubt. 0% chance I'm wrong. And then maybe when all of that is kind of baked in, then maybe we get a chance at a trade here, but way too risky for me right now with all of these things that are about to happen in the next few days, in the next week. And yeah, what is the short interest right now? I haven't looked. Around 17%, and that is based on a float. What float are they using here? 399. So they haven't even updated the float. The short interest is, I think Ortex had some different numbers too. I mean, it's high. It's probably 20%, maybe even over 20%, maybe 22. I think it's a lot more than 65 million based on the latest Ortex that I saw someone tweeting, but you got to ask yourself why. Why are they so emboldened to keep shorting if it's on the verge of a turnaround next week? I ask myself that question. Let's see if we got management talking
Thank
here.
you, everyone, and welcome to the
Yeah, here we go. Here we go. All right, I'm going to be quiet. Let's just hear what they have to say. I'm hoping maybe they give us some new details.
Are in listen-only mode. Later, you'll have the opportunity to ask questions during the question and answer session. To ask a question, you may press star, then 1 on a touch-tone phone. To withdraw your question, please press star and then 2. Please note this call is being recorded, and we will be standing by if you need any assistance with *0. It is now my pleasure to turn today's conference over to Paul Shepard, Vice President of FP&A and Investor Relations.
Thank you. Hello, everyone, and thank you for your participation in today's call. Joining me are Ethan Brown, Founder, President, and Chief Executive Officer, and Lubi Kutua, Chief Financial Officer and Treasurer. By now, everyone should have access to our third quarter 2025 earnings press release filed yesterday after market close. This document is available in the Investor Relations section of Beyond Meat's website at www.beyondmeat.com. Before we begin, please note that all the information presented today is unaudited and that during the course of this call, management may make forward-looking statements within the meaning of the federal securities laws. These statements are based on management's current expectations and beliefs and involve risks and uncertainties that could cause actual results to differ materially from those described in these forward-looking statements. Forward-looking statements in our earnings release, along with the comments on this call, are made only as of today and will not be updated as actual events unfold. We refer you to yesterday's press release, our quarterly report on Form 10-Q for the quarter ended September 27th, 2025, to be filed with the SEC, and our annual report on Form 10-K for the fiscal year ended December 31st, 2024, along with other filings with the SEC for a detailed discussion of the risks that could cause actual results to differ materially from those expressed or implied in any forward-looking statements today. Please also note that on today's call, management may reference adjusted EBITDA, adjusted loss from operations, and adjusted net loss, which are non-GAAP financial measures. While we believe these non-GAAP financial measures provide useful information for investors, any reference to this information is not intended to be considered in isolation or as a substitute for the financial information presented in accordance with GAAP. Please refer to yesterday's press release for a reconciliation of these non-GAAP financial measures to their most comparable GAAP measures. And with that, I would now like to turn the call over to Ethan Brown.
Thank you, Paul, and good afternoon, everyone. First and foremost, I would like to recognize all veterans on this important day of observance, including those veterans we are fortunate enough to have on our team at Beyond. You exemplify the values of putting others and country first, and we are deeply appreciative of your service, sacrifice, and courage. We are indebted to each of you, and that is top of mind today. I will now turn to the business and cover three main subject areas. First, I will seek to put our recent balance sheet activities in their appropriate context. Second, I will briefly review the performance headlines from our third quarter 2025, results that point to a business that remains in turnaround mode. Third, I will outline the key operational and top-line initiatives we are taking in pursuit of this turnaround and return to growth. Though a protracted process, our recently announced transaction with our bondholders was sweeping in its scope, and together with the nearly $150 million in cash we raised through the completion of our existing ATM program, represents a fundamental reset of our balance sheet. Specifically, we reduced debt levels by approximately $900 million, nearly 75% of our total leverage, and put in place a path to potentially convert another $209 million for a total reduction of over 90% in total outstanding debt before consideration of any PIK interest. Further, the transaction not only significantly reduced leverage levels, but extended the maturity of most of our overall debt profile. We view this as an important resetting of our balance sheet and one that supports in many ways a reset of our business as we target sustainable operations and renewed growth. Clearly, we were disappointed by this quarter's results, which I will now summarize before outlining with as much specificity as this forum permits our path forward. Net revenue of $70.2 million came in within our guided range, but nevertheless represents a 13% decline year over year as we faced ongoing category challenges. This quarterly net revenue decline, coupled with a less favorable product mix and higher trade promotion spending versus the prior year, put pressure on gross margin even as conversion costs fell on a year-over-year basis. Lower volumes also reduced fixed cost absorption, and we continue to experience a transitory accounting drag in the form of $1.7 million in non-cash charges related to the suspension of our China operational activities. Accordingly, gross margin landed at 10.3% in the third quarter, down from 17.7% in the year-ago period. Operating expenses, excluding a large non-cash impairment charge relating to certain long-lived assets, improved on both a year-over-year and sequential basis. I should note that operating expenses in the third quarter included substantial non-routine expenses, a feature that makes our cost-cutting appear more incremental than our underlying progress would suggest. Highly conscious of the opportunity our substantial delevering and increased liquidity provides, we are intensely focused on the 5 following steps towards sustainable operations and a return to growth. 1. We continue to address misinformation surrounding our plant-based meats. As many of you are aware, as industrial livestock and pharmaceutical interests rally around scare tactics and misinformation to confuse consumers, we are driving the health profile of our products to greater heights so as to reduce the disingenuous to the absurd. The result of our multi-year efforts is a growing range of products, such as the Beyond 4 platform and Beyond Steak, that deliver on taste with ingredients and nutritional profiles and have earned various accreditations and recognitions from the Clean Label Project, American Diabetes Association, and American Heart Association, and enthusiastic support from an impressive assembly of leading medical and nutrition experts. More of this journey is shared in our short, approximately 9-minute documentary on YouTube, Planting Change, and this defining commitment is made clear in product advertising that highlights impressive ratios of protein to saturated fat, cholesterol, and calories, together with great taste and clean, simple, limited ingredients. It is also made clear in our innovation roadmap, where new products are designed to reinforce this message. Consider, for example, our Beyond Chicken Pieces, which, although still gaining national retail distribution, has achieved considerable taste and nutrition accolades while delivering 21 grams of protein per serving with 0 cholesterol and less than 1 gram of saturated fat from heart-healthy avocado oil, all in just 150 calories. We've recently opened Beyond Test Kitchen, where consumers get the early opportunity to buy our latest innovation before it hits supermarket shelves. The first 2 innovations on this direct-to-consumer platform purposely exemplify our commitment to delivering taste and strong macronutrient ratios with clean, simple, and limited ingredients. One is Beyond Steak Filet, which provides 28 grams of protein with 0 cholesterol and only 1 gram of saturated fat from heart-healthy avocado oil, all with only 230 calories per serving. The other is the Beyond Ground platform. Simply put, Beyond Ground is a center-of-the-plate protein that confidently stands on its own. It's not trying to mimic any species of animal, say a cow, chicken, or pig, and is consistent with our increasing emphasis on using Beyond versus Beyond Meat as our primary brand identifier. It is made with only 4 ingredients: water, fava bean protein, potato protein, and psyllium husk. And each serving delivers an impressive 27 grams of protein and 4 grams of fiber, all in just 140 calories, with no cholesterol, 0 saturated fat, and no added oils. The original is designed as a blank canvas to be seasoned as the consumer would like, and to our delight, we are watching early adopters develop a host of recipes around it. For those who prefer a seasoned variety, we're also selling a Tuscan tomato, a Korean barbecue, and Chipotle pineapple version. 2, we are building back distribution in U.S. retail and U.S. food service. In U.S. retail, we are successfully rebuilding distribution and seeking to consolidate our brand where possible into brand blocks. As you will recall, over the last 18 to 24 months, we've seen a substantial migration of our products from the refrigerated meat aisle to the frozen meat aisle and frozen meat alternative aisle. Though we believe that ultimately plant and animal protein should be offered to consumers in equally prominent locations in the supermarket, and ideally in the same section to facilitate convenience and choice, the unplanned and at times chaotic transition, replete with long periods without product availability at all, followed by consumers' lack of awareness regarding new placement, has been damaging to our business. Accordingly, we are now encouraging the consolidation of our brand, where possible, within brand blocks in the frozen section of supermarkets to reduce what can seem like a game of hide-and-go-seek for the consumer. As we rebuild our presence in U.S. retail, we are prioritizing consolidated offerings at high-impact chains to drive results. For example, in October, we announced plans with Walmart to increase availability of select products at over 2,000 stores nationwide, including our new Beyond Burger 6-pack, which is designed to offer consumers value during a sustained period of economic stress. In U.S. food service, we are adjusting our go-to-market strategy to capture a higher percentage of operators whose consumer base assigns value to our award-winning, non-GMO, plant-based meats made from simple and clean ingredients. Though we expect a renewal of interest in plant-based meats in the broader restaurant segment in the United States, particularly as the price of animal protein continues to rise, and we start to achieve the necessary scale to consistently underprice it, for the time being, we see room for growth within institutions, restaurant chains, and other establishments that are more directly and explicitly focused on health and clean ingredients. Accordingly, we are increasing our investments against these specific targets. 3. Through our transformation office and program, we are implementing further actions to reduce and reset our operating expenses. We continue to seek to more fundamentally and more quickly reset our operating base. And as you recall, we have enlisted the restructuring support of Alex Partners, including our appointment of John Boken as Chief Transformation Officer to accelerate the work of our transformation office. We are deep into this process and are committed to positioning the business for a more fundamental resizing of operating expense. Further, this underlying series of actions relating to our base operating expense is joined by what we believe will be a reduction in certain non-routine and non-recurring spend that burden our operating expense in 2025. 4. Through our transformation office and program, we are taking additional action to expand margin in the currently constrained demand environment. We have and will continue to take steps to exit certain unprofitable product lines while reconfiguring others, are making targeted investments in our facilities, including a continuous production line for certain popular but currently lower margin products, and are doing extensive RFP work to drive competition and lower pricing within our supply chain. As with operating expense, we expect this underlying margin progress to be accompanied by the retirement of certain drags previously mentioned, such as the charge for China-related depreciation, and remain committed to the goal of laddering margins back to 30% plus. 5. We are considering certain strategic initiatives that, if successful, could help accelerate a return to growth. The path articulated above addresses the core challenges our business faces. The need to counter misinformation and change the product narrative around our products, reestablish distribution and improve product availability in the U.S. retail and food service markets, and drive significant operating expense reduction and margin expansion through our transformation office and program. These, along with other similar efforts, are designed to support the achievement of EBITDA positive operations as soon as possible, even in an environment where demand remains subdued for the near term. We do, however, see the potential for growth outside of these actions when we take a more comprehensive view of the Beyond brand technology across our U.S. and European markets, and we will be exploring this in quarters to come. It would be too early to provide further information today for a host of reasons, and as such, I'll leave the subject now for future updates. In closing, as those of you who have followed us closely know well, over the last decade or so, we've lived at the forefront of the rise and precipitous destabilization of a nascent industry with a deeply disruptive potential. All too typical of the heavy turbulence experienced by a company so closely wedded to emerging innovation, we've, as they say, been through it. Along this journey, I have sought to characterize our response as harnessing adversity to grow stronger, better, and more capable of achieving our long-term vision. More than any time over the last 6+ years of being a public company, we have the opportunity today to reset our business in service to sustainable growth on behalf of all shareholders and on behalf of our mission. We are buoyed by, and I am personally moved by the tremendous support we have seen from retail investors from throughout the United States all the way to Korea, and have great enthusiasm for winning on their behalf. We are acutely aware of having more challenges to overcome, more misinformation to counter, more cost to cut, and more margin to expand. We've been in our turnaround phase for too long, and moving forward, you will not simply see more of the same from us. There is plenty of fight left and beyond, and enormous enthusiasm to use this reset to hasten our future as a global protein company of tomorrow. With that, I will now turn the call over to Lubi.
Thank you, Ethan, and good afternoon, everyone. I'll begin by reviewing our financial results for the quarter before providing some brief remarks on our outlook for the fourth quarter, and finally, commenting on the significant balance sheet initiatives we completed subsequent to the end of our third quarter. Total net revenues decreased 13.3% to $70.2 million in the third quarter of 2025, compared to $81 million in the year-ago period. The decrease in net revenues was primarily driven by a 10.3% decrease in the volume of products sold and a 3.3% decrease in net revenue per pound. The year-over-year weakness in volume of products sold continues to reflect general softness in the plant-based meat category, as well as select distribution losses and, to a lesser extent, impacts from competitive activity. While category dynamics in our key international markets remain more favorable than the U.S., two of our top three markets in the EU have also been experiencing year-over-year declines, according to consumer takeaway data. This underscores the current reach of the soft macroeconomic environment in plant-based meat that we continue to navigate. With respect to pricing, the year-over-year decrease in net revenue per pound was primarily driven by higher trade discounts, reflecting in part reduced promotional efficiency, as well as changes in product sales mix, partially offset by favorable changes in foreign currency exchange rates. Taking a closer look by channel, U.S. retail net revenues decreased 18.4% to $28.5 million in the third quarter of 2025, compared to $35 million in the year-ago period. The decrease in net revenues was primarily driven by a 12.6% decrease in volume of products sold, mainly reflecting weak category demand and reduced points of distribution, and a 6.6% decrease in net revenue per pound. Net revenue per pound was negatively impacted by higher trade discounts and price decreases of certain of our products, partially offset by favorable changes in product sales mix. In our U.S. food service channel, net revenues decreased 27.3% to $10.5 million in the third quarter of 2025, compared to $14.5 million in the year-ago period. The decrease in net revenues was primarily driven by a 27.1% decrease in volume of products sold. This decrease in volume was primarily driven by weak category demand and the lapping of a limited time offering of our chicken products at a QSR customer in the year-ago period. Turning to international, in international retail, net revenues decreased 4.6% to $15.8 million in the third quarter of 2025, compared to $16.6 million in the year-ago period. The decrease in net revenues was primarily driven by a 12.5% decrease in volume of products sold, partially offset by a 9.1% increase in net revenue per pound. The decrease in volume was primarily driven by reduced sales of our burger, dinner sausage, and chicken products, mainly in Europe, where, as I mentioned earlier, two of our top three markets are also experiencing softer category demand. The year-over-year increase in net revenue per pound in international retail was primarily driven by favorable changes in foreign currency exchange rates, price increases of certain of our products, and changes in product sales mix, partially offset by higher trade discounts. Finally, international food service net revenues increased 2.4% to $15.3 million in the third quarter of 2025, compared to $15 million in the year-ago period. The increase in net revenues was primarily driven by a 4.4% increase in volume of products sold, reflecting higher sales of chicken products to a QSR customer, partially offset by reduced burger sales to certain QSR customers. Net revenue per pound decreased 2% compared to the year-ago period, primarily driven by changes in product sales mix, partially offset by favorable changes in foreign currency exchange rates and reduced trade discounts. Moving down the P&L, gross profit in the third quarter was $7.2 million, or gross margin of 10.3%, compared to gross profit of $14.3 million, or gross margin of 17.7% in the year-ago period. Gross profit and gross margin in the third quarter of 2025 included $1.7 million in expenses related to the suspension and substantial cessation of our operational activities in China. More generally, our gross margin also continues to be weighed down by lower volume, which is negatively impacting fixed cost absorption within our manufacturing facilities, and more recently by higher trade discounts as a percentage of gross revenues. While our total cost of goods sold per pound increased on a year-over-year basis, primarily reflecting higher materials costs and inventory provision, we made positive progress on reducing our conversion and logistics costs. In this regard, and through various initiatives under our transformation office, we are pursuing additional investments which we expect to further benefit our conversion costs beginning in the early part of next year, and we are optimizing our supply chain to wring additional savings out of our logistics costs in the U.S. Lastly, as Ethan mentioned, we have also begun extensive RFP work to pursue potential savings on our materials costs. Now turning to operating expenses. OPEX for the third quarter of 2025 was $119.6 million, which included $77.4 million in non-cash impairment charges related to certain of our long-lived assets. With regard to the impairment, in accordance with accounting guidance under ASC 360, when certain triggering events or combination of events have occurred, we are required to review our long-lived assets for potential impairment. Given our lower than expected performance through the first 3 quarters of 2025, our view that the ongoing softness in the plant-based meat category is likely to persist longer than previously anticipated, and the decrease in our stock price during the quarter, we determined that triggering events had occurred and performed a quantitative assessment that concluded that an impairment existed as of September 27, 2025. The total impairment amount of $77.4 million was recorded as a loss on our income statement and allocated to PP&E, operating lease ROU assets, and prepaid lease costs on our balance sheet. In addition to the impairment charge, operating expenses in the third quarter of 2025 also included certain non-routine items as summarized in our earnings press release, totaling approximately $2.1 million. Excluding these items and the impairment charge, operating expenses in the third quarter of 2025 decreased as compared to the year-ago period, primarily driven by reduced marketing expenses and reduced salaries and related expenses for non-production staff. Below the line, total other income net was $1.6 million in the third quarter of 2025 compared to total other income net of $4.4 million in the year-ago period, primarily due to a reduction in net realized and unrealized foreign currency transaction gains, and an increase in interest expense related to finance leases and our delayed draw term loan facility, partially offset by a benefit from the remeasurement of warrant liability as well as interest income. Overall, net loss, inclusive of the aforementioned impairment charge, was $110.7 million in the third quarter of 2025 compared to $26.6 million in the year-ago period. Net loss per common share was $1.44 in the third quarter of 2025 compared to net loss per common share of 41 cents in the year-ago period. Adjusted EBITDA was a loss of $21.6 million, or minus 30.8% of net revenues in the third quarter of 2025, compared to an adjusted EBITDA loss of $19.8 million, or minus 24.4% of net revenues in the year-ago period. Turning to our balance sheet and cash flow highlights, our cash and cash equivalents balance, including restricted cash, was $131.1 million, and total outstanding debt was approximately $1.2 billion as of September 27, 2025. Net cash used in operating activities was $98.1 million in the 9 months ended September 27, 2025, compared to $69.9 million in the year-ago period. While this increased rate of cash use from operating activities partly reflects the negative impact of reduced sales and gross profit, among other things, it is also worth noting that several non-routine factors, including those related to our balance sheet initiatives and certain non-routine legal expenses, have also meaningfully added to cash use this year. Capital expenditures totaled $9.3 million in the 9 months ended September 27, 2025, compared to $4.5 million in the year-ago period, largely reflecting increased investments in manufacturing capabilities intended to improve our production efficiency and expand our gross margin. Net cash provided by financing activities was $87.8 million in the 9 months ended September 27, 2025, compared to net cash used in financing activities of $1.3 million in the year-ago period. The year-over-year increase in net cash provided by financing activities primarily reflects draws in the aggregate amount of $100 million from our delayed draw term loan facility, partially offset by related debt issuance costs. I'll now touch briefly on our outlook for the balance of the year. As I indicated earlier in my remarks, we continue to navigate a soft and uncertain macroeconomic environment across several of our key geographies. Under these circumstances, it is difficult to forecast our operating results beyond a limited horizon, and we are therefore continuing to provide only limited guidance around our near-term revenue expectations. Specifically, in the fourth quarter of 2025, we expect net revenues to be in the range of $60 million to $65 million, reflecting, among other things, ongoing demand weakness in the plant-based meat category and the anticipated impact from distribution losses at certain QSR customers. Before closing, I'll take a moment to discuss some key events with respect to our balance sheet that occurred subsequent to the end of our third quarter. On October 29th, we announced the final tender results of our previously communicated debt exchange offer. Successfully tendered notes in connection with the exchange offer represented just over 97% of the aggregate outstanding principal amount of our 2027 convertible notes. Said differently, all but $29.5 million of the original $1.15 billion aggregate principal amount of the 2027 convertible notes were successfully tendered in the exchange offer. We believe this is a significant outcome that goes a long way in strengthening our company's balance sheet for the long term by substantially reducing our total debt outstanding and simultaneously extending the maturity of the vast majority of our remaining debt obligations. Following the final settlement date on October 30th, as part of the exchange offer, a total of approximately $209.7 million in aggregate principal amount of new second lien convertible notes and approximately 318 million new shares of common stock have been issued to previous holders of the 2027 convertible notes who participated in the exchange offer. In addition, and separate from the exchange offer, subsequent to the end of the third quarter, we sold approximately shares of common stock under our ATM program, generating approximately $148.7 million in proceeds net of selling commissions. As with the exchange offer, we believe this incremental capital infusion goes a long way in strengthening our balance sheet for the coming quarters and further supports our efforts to execute our turnaround plan. Notwithstanding these developments, we intend to continue to pursue our near-term objectives with urgency and discipline as we target the achievement of sustainable operations as quickly as possible. And with that, I'll turn the call over to the operator to open it up for your questions. Thank you.
We will now begin the question and answer session. To ask a question, you may press star, then one on your touch-tone phone. If you are using a speakerphone, please pick up your handset before pressing the keys. If at any time your question has been addressed and you would like to withdraw your question, please press star and then two. Our first question comes from Ben Toyer with Barclays. Please go ahead.
Good morning, good afternoon, evening, Ethan and Luby. Thanks for the detailed prepared remarks and congrats on some of the refinancing stuff. Two quick ones I had for you. So number one, Ethan, you talked about your path to get back to a gross profit margin of 30% plus, which is clearly something you used to have in the past and many years ago, even with a sales level that's comparable to what we have right now, you were able to achieve that. So just to help us maybe understand what's currently holding you back of being as profitable as you may have been back in 2019 when sales was just around that high 200, close to 300 million mark, but gross margin was actually in the low 30s. So that would be my first question, and then I have a quick one for Luby on the financing piece.
Great, and good to hear from you, and thanks very much for the question. So I think if you look at our history on margin, first of all, I appreciate you recognizing that this is not something that is just only future oriented. We've had healthy margins in the past, and I think the main drag that you see throughout the P&L is the lower top line. We built a system that was for much higher revenue than we're currently facing, and so we've been going through the process of trying to scale that back and deal with things like lower overhead absorption and things of that nature. But I think it's really almost a tale of two different trends. One is we have this lower top line, which is reverberating throughout the P&L, and there's some pressure on margin as a result of mix. So those things are weighing down overall margin, and it's just a question of calibrating the production capacity to the current level of demand is, I think, the biggest issue we have. And then second, there's a lot of underlying progress that's going on around our operations, and you can see that now this quarter, for example, in conversion costs. They're lower on a year-over-year basis. But a lot of that progress is on a slightly longer time frame, and I expect it to start showing up in 26. And so I'm actually pretty confident that we can, make a substantial step change in our margin over the next several quarters. And so if you look at the implementation of the continuous production lines that we're putting in for some of those lower margin products that are inhibiting that are leading to some of the mix challenges we're having, those should be going in shortly. So we expect to see improvement from there. We're looking at the RFP work that's going on now to pay dividends in 26, and some of that's actually underway now. We've seen some good savings on some key ingredients, and of course we're continuing to optimize our portfolio. So I think the conservative outcome of all of this is a healthy margin at much lower volume. But the optimistic outcome of all of this really is that growth resumes and we put forward some really nice margins, right? And so if we can continue to drive this work, we'll at least get to healthy margins with a lower top line. But if we can get back to growth, all this pays dividends that are, of course, much larger. So I hope that was instructive.
Okay, Wes, and then Luby, one for you. Can you help us maybe reconcile at the end of October or whatever, a few days ago, what your cash balance looks like? Because obviously at the end of September, it was about, call it 120 million, excluding the restricted piece of it. So just to understand some of the ADM transactions plus some of that convert, has there been anything that's helped to get the cash balance up a little bit higher, just in light of the quarterly cash burn still somewhat relevant? So to understand a little bit like what's the level of cash right now?
Yeah, hey Ben. So the only thing we can really comment on that happened subsequent to the end of the quarter is what I discussed in my prepared remarks related to the ATM. There were obviously, we've detailed in some of our other disclosures around the exchange offer that there's a certain amount of transaction fees that are associated with that. But we're not prepared at this point to quantify exactly how much that was. But I think if you look at the cash balance, where we ended the quarter, the third quarter, and then you add in the incremental proceeds from the ATM, You would obviously have to make some assumptions about, some transaction fees paid, as well as just kind of the ongoing rate of cash consumption of the business to get to the number that you're looking for. But we can't at this point provide that specific information.
Okay. Thank you very much.
Just on the quarterly cash consumption, it's obviously something we're very, very focused on. We brought it down to much lower levels in the past, and I think you should expect us to return to that. I mean, we're obviously extremely focused on this EBITDA positive goal, and a lot of the transformation work that's going on is designed to really minimize cash use and ultimately turn it into cash generation. But I think that this year has been characterized by a lot of non-recurring and non-routine expense. I mean, we've had the transaction going on. We've had this arbitration, which we were successful and we won that, which was a nice outcome given that the facts there. So a lot of that hopefully will be burning off, and we can get to where we go.
Okay, perfect. Thanks for that, Ethan. Thanks, Luby.
Thank you.
Again, if you have a question, please press star and then 1. This concludes our question and answer session. I would like to turn the conference back over to Ethan Brown for any closing remarks.
Thank you, and thanks, folks, for joining. I think, given that we didn't have much Q&A, I might just spend a minute reinforcing some of the comments that I made during the prepared remarks. One of the main things that we need to keep doing to return to growth is to change the narrative around our products and around the brand in general. And you've heard me talk about this many times. There is a very significant set of misinformation out there that slowly, I think, we are making progress toward and helping to erode. But this is the key factor. We have spent so much time working on the health benefits of our products and the Beyond 4 platform and subsequent products that are just getting cleaner and cleaner and healthier. And I think that's starting to pay some dividends with a certain set of consumers who are able to look through a lot of the misinformation that's going on and make decisions for themselves. And so we're continuing to encourage folks to do that. The most recent products that we've launched around Beyond Ground and around Beyond Steak really speak to that, with the Beyond Ground product being only 4 ingredients and the Beyond Steak having the really terrific macronutrient profile, 28 grams of protein, less than 1 gram of saturated fat, and that saturated fat is coming from avocado oil. But the main point is that the more we can get consumers to see the very strong health benefits of our products, the more we can get back into growth mode. I think price is extremely important, and you see us focused on that. In fact, in Europe, we are providing at the same price to its animal protein equivalent to a very large customer, one of our products. So we are working very much on driving the price toward parity with animal protein. But here in the U.S., it's really around countering this misinformation campaign. That's why I continue to come back to the work we're doing with Stanford. I continue to point out the support of the American Heart Association, American Diabetes Association, so on and so forth. So that's the work that we're doing on Fix the Narrative. You'll see us continue to reinforce that with marketing. You'll see us continue to reinforce that with the new products that we put on the market. And you'll continue to see us put out information like planting change and other pieces that help the consumer see through some of the misinformation. In terms of innovation, I mentioned toward the end of my prepared remarks that we're doing 2 things, I think, that should be of interest and hopefully point people in the direction that we're headed. One is the increasing emphasis on the word beyond versus beyond meat as we go forward. And that's really around broadening the aperture of our business. We have tremendous innovation capabilities, and I want to make sure that those are being put to the best use for the consumer. And so that's the first. And the second is the Beyond Test Kitchen. This allows us to really open the gates on innovation in an inexpensive way and get products to the consumer as we broaden this aperture. And so any category that we go into, you should expect us to raise the bar in terms of health and nutrition, obviously taste and things of that nature. And I think we're capable of doing that because of the tremendous R&D capacity we've built up over the last now nearly 17 years. We understand plant protein and plant ingredients in a way that many, many other companies don't. And so as we look at other areas to sort of tilt our arsenal of technology and R&D toward, I hope I'm not drinking the Kool-Aid on this, but I think that our ability to go in there and do things that are disruptive is exciting. And lastly, over many years, we've built up a lot of innovation, so we have quite a bit of dry powder in terms of what we can go ahead and get into the market. And so this is where my comments came from, that don't expect more of the same from us. We are looking to transform not only the operational base, the margin of our company, but also the top line growth. And we're thinking about that creatively and aggressively. I've really enjoyed the support of the retail investors recently. I've been paying attention to their comments. We feel very much indebted to them for their support and for their continued commitment to BYND, and we're looking forward to growing together with them in years to come. So with that, I'll wrap it up and talk to you guys next time. Thanks.
The conference is now concluded. Thank you for attending today's presentation. You may now disconnect.
Well. I mean, the stock price is holding up pretty good for anyone who is in below $1.20. Now, I don't know what's going to happen next week as we get closer to that vote. And I've been reading y'all's comments during that call. Unfortunately, they mostly just read what they published yesterday, so we didn't get to learn a whole lot new in today's call. Only 2 analysts had questions, which is far fewer than I expected. But, my basic, if you guys have been watching my channel for a long time, I'm a carnivore. I'm not a non-animal protein eater, but I did try the products just to be fair. And, I don't need to be a consumer of the product to observe when perhaps the market has overcorrected on a price of a company that could possibly recover. Now, I'm not saying that is the situation just yet. I'm just saying it's worth observing. If you like having some speculative trades, there might be at some point a good entry into this stock. I don't know if that entry point for me is today. I kind of would prefer for my own risk tolerance to get the vote out of the way and see what the company plans on doing after that. But that's just me. I mean, some of y'all that are hardcore BYND folks are happy to ride through the vote. And I certainly am not here to dissuade you of anything. I'm just talking, as an outsider kind of looking in, someone who traded the stock for a couple days in October and then got out. And Anya is in the chat. I mean, she can tell you, Anya and I have been talking about this ticker for years, it seems like. And I finally bought some on October 20th, that Monday morning. But that was a very short trade for me. I like beat down tickers at the right point. It's all about that magic timing. What is the right point? We don't always get it right. We will see. There's a lot of moving parts, a lot of levers being pulled. And I heard the CEO kind of say what I had typed to you guys in the chat 15 or 20 minutes ago. The problem with Beyond Meat is they had gotten too big in terms of production and products and expenses, too big for the demand of the product, or the demand collapsed, or new competitors came in. There's a variety of different things that happen here. And so they had a cost structure that was unsustainable. And now with the recent actions that happened in October, all of that's been reset. They have a new lease on life. It doesn't mean that they're in the clear or guaranteed. It means they got a chance now. They got their standing 8 count. Now they get to get back in the fight. And I heard him say a lot of things, you know, as someone myself that was in the corporate world. And I've looked at a lot of different troubled stocks. I heard him saying some of the right things. You know, they're looking at what they can do to wring cost out of the entire process, including packaging and shutting down factories in China, whatever their operations in China were. I don't even know what their China operations were, but I'm hearing them talk about lowering cost, consolidating, taking advantage of this recapitalization, restructure the balance sheet to maybe get back on their feet. Maybe they will. There's a lot of haters for Beyond Meat. I'm not one of them. I'm not a cheerleader for it either. I wouldn't, you know, I'm somewhere in the middle. I'm just a trader looking for a good deal. There's a lot of people that want this company to fail. I don't know why. I don't want any company to fail, but you got to be sized correctly, and you got to have management that's willing to make hard choices. And it sounds like they're willing to do it. So it'll be up to their execution, and it will be up to consumer demand. And I wish them a lot of success. And if you guys are speculating in this, I wish you success. I did a video about a week ago, which was what I called a fair value analysis. And I ended up coming up with 3 different price targets for Beyond. With the caveat, this is not taking into account next week's vote. But I think my 3 levels that I came in at was like, depending on how you're viewing management's ability to quickly turn this company around. I had a no turnaround scenario. I had a base case, and then I had a very optimistic scenario. I think the range of those was like 60 cents, $1.12, and $2, depending on where you think management is at. I'm not here to tell you what is the right decision for you. All of y'all have different viewpoints, and far be it from me to try and change your mind. For me personally, I'm very risk averse on this company. So I would fall down in the, you know, I need it a lot cheaper than $1.20, but it may never get there. It may never get there, and I might just miss out. So that's okay. Amato Music says what day? It is on the 19th, November 19th. That is a Wednesday. Let me just put the proxy up. Let's look at that real quick. I'm sure this is probably on their investor relations page too. November 19th at 8 a.m. There are basically, I don't know, half dozen proposals. They've got to get you to approve the potential issuance of shares of common stock, because the issuance is going to be greater than 20% of the number of shares already issued and outstanding. There is proposal number 2 to increase the number of shares. Sorry, I've only read a couple of these. I haven't read number 2. It looks like that one has to do with the executive compensation. They want to make sure they have enough shares for that. Really, what I was looking at was number 3 and number 4 and 5. 3 is to increase the authorized shares from 500 million to 3 billion. And on top of that, they have proposal 4 and 5, which are both contemplating a reverse split, depending on if proposal 3 is approved, I think. No, this one says not conditioned on the approval. Oh, proposal 4 is, okay, proposal 4 is the one that covers all of the reverse splits. And then there were a bunch of conditions further down in here. Where is that at? Compensation, proposal 2, proposal 3. Approving and declaring advisable a series of 30 alternate amendments at the discretion of the board. So depending on if proposal number 4 gets approved, and I'd say 99% it's going to get approved, then they're going to be contemplating a reverse split between 1 in 10 and 1 in 50. What timing? I don't know, but I'm just going to guess. I know there are people on social media saying this is never going to happen. I'm going to tell you right now, let's see, this will be November 19th. Probably you'll know something by end of January, middle of January, maybe even end of the year would be my guess. Just going on rough back of the envelope memory recall from what other companies tend to do, several weeks after the vote. But it also, it depends on what the price of the stock is doing. So I'm not saying it's a certainty there'll be a reverse split, but it's very high probability. Very high probability. And a lot of that has to do with if they feel like they need to raise more cash or not. Chaotic Good says, absolutely no way I'm voting yes on either of those. I think what happened, Chaotic Good, is they made sure, you remember in October how they gave all those shares to the bondholders, 316 million of them. And then the day they gave them those shares, that was the date of record for the vote. So you got 316 million institutional votes that are going to probably, I think, carry the vote. Whatever those institutions decide is going to be how the vote goes. And they might not even own the shares anymore. They owned them long enough to own them on the date of record to be able to vote. Call me cynical, but I think that was kind of like a handshake agreement. We're going to give you these shares. We're going to make that the date of record. And then the lockup is going to come off and you can do whatever you want the next day. We'll find out. I'll be curious how this goes. I like to try and guess this stuff because I'm always trying to figure out what are these corporations and these lenders conspiring to do to us as retail. And every single one of these is a learning event for me, hopefully for you. And I use all of them to help more finely tune my predictions for the next one. And everyone always gets mad when I make predictions, but we're getting better and better at being right every time. Haven't always been right, but we're getting better and better. We'll see. I know enough to know that I can't say anything with certainty. I can guess things with pretty high probability. Paul says maybe people will pump the stock before the split. They could. It's tough to pump something with 450 million shares, though. That's the problem. It's really tough. There was that moment, that little window, those first couple days in October after the shares got released and everybody was hyped up. And there was that little bit of friction in the system where maybe not all the bondholders had gotten their shares yet. That little bit of friction was just enough to push it up to 880. And then they started selling. That's how I'm reading it. Yes, man, Tiwa says, where is the float? We have dilution tracker, guys, is one of the best for quickly updating this information. Your brokers are going to be behind by a week. Social media is going to be behind by 2 weeks. I recommend you read the filings and do the math in your head. But dilution tracker, if you want a reputable source, this is all they do. They have the float at 452 million and the shares outstanding at 456. That is including the new 59 million that Beyond Meat sold in October. So it's even higher than anybody's talking about right now. And yeah, Karina, I'm sure that the shares borrowed is very high. 30% would not surprise me. What is the cost to borrow? That's another good question. 2.7. So, there are a lot of shares clearly shorted, but there also appears to be a very high supply available. And I'm not looking at 10 million and saying that. I'm looking at if Interactive Brokers, all the data here is from Interactive Brokers. If their cost to borrow is only 2.7%, that means like across the entire lending pool, there's plenty of shares available. I get excited when I see really high cost to borrow, more so than high short interest. Right now, if I see high short interest and a low cost to borrow, I get worried that there's plenty of cheap shares if more shorts want to come in. They have plenty of firepower to hold this thing down inexpensively. That's how I look at it. Some people don't agree with me, but I rarely even look at short interest anymore. I'll start out looking at cost to borrow. When you have both of them high, that's when you're really getting in the sweet spot. And remember that's how it was in middle of October. We had a high short interest and a very high cost to borrow. That got my attention. That got me buying this stock on October 20th on pre-market. We had a moment. That moment is gone now. Now you're in a recovery play with some pending corporate actions. Karina says the brokers are offering a low cost to borrow. It's really, cost to borrow is just a function of supply and demand. It's not like the brokers they want to make money. If they have low inventory of shares, they're going to jack the rate up. When you see a low cost to borrow, that means they have plenty of inventory to borrow if someone wanted to borrow it. And as the inventory gets used, as shorts borrow it, they will ratchet up the interest rate. And, that 2.7% we're looking at, that was one broker. They're competing against every other lender out there. So they can't charge 10 or 20% if everyone else is charging 2.7. But it's, you know, if everything gets borrowed, then and the cost to borrow is high, you know everything's been borrowed everywhere. But the McRib is back, Andrew says. I tried a McRib last time it was back. It's not on my every year thing, but it wasn't as bad as I feared it might be. Andrew says, when Beyond Burgers are half the burger price of McDonald's, we got game. Like I said, I did the taste test, and the burgers were good. Not going to knock it. I'm scared to try the sausage. Are there any meat eaters out there like me who have tried the Beyond Meat sausage? I hate that these people keep putting that picture out on social media of the one that got all melted. I don't know what happened to it. I can't get that image out of my head. I bought the beef, I bought the Korean steak tips, and I bought the breakfast patties. I'm scared to try the sausage. But if one of y'all tells me it's just as good as Texas sausage, you know, we got some good sausage down here. If one of y'all tell me it's in the ballpark, I will try it. Chaotic good, yes. If the cost to borrow is high and the short interest is high and the FTDs are high, there's definitely something going on. Those plays get my interest. And there's a lot of good trades for day traders or swing traders or momentum traders that maybe don't have all of those things. They just have social media attention and momentum and a small float. And those can be good trades too. I will jump in a stock even if the cost to borrow is not high, but I won't listen to anybody on social media other than thanks for pumping that, and I'm going to ride it for a few hours and hop off. Chaotic Good says, I did not like the sausage. Karina says the sausage is good. Yeah, there's a different sausage though, Karina. There's the breakfast patties, and then there's like the links, the long, I guess it's supposed to simulate a pork, that you'd put out on your grill, pork sausage. I'm scared to try that one. Codependent says, what were your thoughts on the call? Yeah, just a quick wrap up. I would say watch my video from last week where I go over 3 different price points depending on what you think management is going to do on the turnaround. It'll give you kind of like 3 different levels. Maybe you'll look, there's a lot of people that think Beyond Meat is going to turn this thing around in a quarter, and they're telling you it's worth $20. That was not my analysis. I did give you a scenario of what it would be worth with a turnaround, but I don't have any crazy price targets for you. I live in a world of reality of how Wall Street is going to look at this, and now we have a huge float. But the reverse split is likely to get approved in a week, and that'll shrink the float again. So, there's a lot of moving parts still here now. It's hard for anybody to say with certainty what's going to happen. I know I'm not that smart, but I can look at numbers and I can tell you a valuation. Now, can the market run prices of stocks up far beyond what they're worth? Oh yeah, we see that all the time, even in blue chips. Look at a Tesla or a Palantir. Like, how do you explain valuations like that? The market does crazy things sometimes. But, if that starts happening, I could jump on that train anytime. Right now, I'm just trying to figure out, if I were to try and be a bottom feeder here, where do I feel safe giving it a shot? That's how I'm looking at it. Yeah, Mantiwa, Yahoo is incorrect. Remember, guys, they're a dumb data consolidator. They get feeds of data from third parties and they post the data. You go to someone like a dilution tracker where their business is reading filings and updating the share count. That is all they do. This is your trustworthy source. This is what the float is. Yahoo is smoking crack. That it is useless to you, and they will get it right eventually. But if you're clinging to that because you think there's some authority, I'm here to tell you, and fact check me on this, they are not the source of any of their data. They're just reposting somebody else's data, and that party is incorrect. The other thing that I love about Dilution Tracker is you can go down here to their support window and they will actually talk to you. They will get back to you. They will answer questions. Usually the same day. You're not going to find that on Yahoo or Ortex or Bloomberg or who else have I tried subscriptions to? None of these people. These guys are good. I'm not saying that to sell you a subscription to Dilution Tracker. You can get a free sign up on this. You don't need to pay for their package. But you want a reliable source right there. Are you correct? Says reverse split, often the kiss of death. It can be, Mr. Correct, but it depends on why the company's doing it. And typically when they're doing it for one of two reasons: to get the price up, to collapse the float, and a third reason to potentially sell some shares at a higher price. And it depends on what the market is thinking their reasoning is going to be. If the market thinks that Beyond Meat is going to immediately sell a metric ton more of shares, then you'll see the price get punched down. But if they don't sell a bunch of shares, then you can do okay. Like a very strange one that I can give you an example of is Hycroft Mining. They did a reverse split back here in November 2023, and it got knocked all the way down to $1.63, but it's trading at $9.75 now. That's like 5x. It's not always a kiss of death, but Hycroft wasn't out there every quarter doubling the float. They were very strategic about their cash raises, very minimalistic. And the market's not going to punish you too bad if you're not out there needing to raise cash nonstop. If you are needing to raise cash to not go bankrupt every quarter, you're going to get spanked. And it's not because of the RS, it's just the continually selling shares. So I would say, to you Beyond people, I'm not going to be Mr. Negative and say reverse split is a kiss of death, but you better understand if the company is going to need more cash, because that could be a kiss of death. And if that happens, if you think that they're going to need cash and you still love the company, just are we still live? Can y'all see me? I can't even tell if I'm live. I'm trying to get my YouTube panel back up here. All right. Well, sorry about that. I don't know what happened. I looked up and it said, it looked like my whole internet service was off. And then a couple seconds later, it came back. Anyways, probably a good time for a break. And my wife is going to be heading out to work in about an hour. So maybe we'll do another live stream this evening. If you are new here and you haven't watched last week's Beyond Fair Value analysis, I'd say check that one out. Leave me your comments or questions. And I probably won't have much to say about Beyond until the vote next week. That'll be fun to watch. But I mean, I have no reason to talk about it every day. But if y'all have questions, feel free to drop them in the comments, especially if you're watching on replay. Darwin says, is it still on the threshold securities list? I don't know. That is a good question. Let's see. Let's see if we can find out. I don't typically pay attention to that, to be honest. It is still. Yeah, sure is. Sure is. Anyhow, I'm going to go visit with the wife for a bit before she goes to work, and maybe we'll do another live stream this evening on some other topic. Beyond, folks, go watch last week's fair value analysis, and then maybe we'll have a chat around the time of the vote. Or, drop in any live stream. We got one scheduled for sure on Saturday evening, just for fun. We got a special guest coming on to the show. I'm still waiting for any of the AMC people that are not happy with my coverage to come say they want to be on the show. Haven't heard from anybody. I think Mediocre might be on Saturday's show also. Mediocre Trader. Maybe we'll talk about some other things besides stocks. Maybe a little bit of all the government and economic stuff going on. We're not going to take a hard turn into becoming a political channel. I'm not saying that, but to the extent that some government decisions are affecting the market, i.e., 50-year mortgages and all that fun stuff. Could be some interesting topics there. Chaotic Good says, let me do it. What you want to come be an advocate for AMC? Yeah, I mean, anybody's welcome. If you want to come on camera or even come on mic. I don't know why some people think I'm against AMC. Other people think I'm getting paid by AMC. I always say these two camps need to get together and battle it out. But I'm just a middle of the road guy. And so I end up making everybody mad. Middle of the road, like, yeah, I can take a very firm position on something. I have very firm opinions, but I'm not like hardcore in this camp or that camp. I just call it like it is. Just call it like it is. So I end up making everybody mad. But they only get mad because we are right. They only get mad because we're right. Yeah, hey, Chaotic, send me a DM and let's chat. We got time till Saturday. And, nothing should be seen as a debate. It's a discussion. There's no reason for any of us to be adversarial on anything. There's GME bulls. I'm sitting here saying I'm buying GameStop. I like Ryan Cohen. And they're like, Tony hates GameStop. You should debate him. Like, what is there to debate, you dumbasses? I'm long the fucking stock. But you didn't agree with all of our talking points. Well, la-di frickin' da. Sorry I didn't cradle all of your talking points carefully like you needed me to. Doesn't mean that I don't have some things that I'm bullish about. You might have some things wrong. We could still be in general agreement. Option Trader, how you doing? Chaotic says, all right, improv is hilarious. All right. And we can talk about your roosters that you process too. Maybe we'll have a discussion so we can convince my wife to let me process the 7 hens that are they're eating our chicken food and not delivering the goods. Anya says, I was wondering why. Yeah. Anya's like, why are you buying a store egg? They're giving me, I have 8 hens, Anya, and they're giving me 1 egg a day. Now there's either they found a new hiding spot, Anya, to lay their eggs, not in their little nesting box, or they're slacking on the job. Richie asks, are you buying? I did buy some at 20. I had 2 buys last week, Richie. 21.95 and I think 21.25. Someone, Anya, can probably fact check me. I post my trades in the Discord in VIP. And I have my next buy level at $20.65. I don't know if it'll get there. But I just set up, I like to buy around this demand zone. Oh, look, I did put my note here. 21.25. Let's move that where we can read it. 21.25 on 11.7, Richie. So, yeah, I have some more levels I'd like to buy at if it keeps dropping, and it might keep dropping. It might hit. I mean, I hear people saying $19. It definitely could hit that. I'm not going all in at $21.45. I always leave room to increase my buys. First of all, I try and be smart about only buy at the bottom. So as you can see, I'm often waiting many months. Here I waited almost half a year to buy shares. I bought and then I sold. Where's my sell? Oh no, I didn't. I bought in April, sold in May, bought in June, and then I waited 5 months to buy again. Meanwhile, we got people cleaning out their retirement fund to buy GameStop at 28. I'm like, what are you doing, bros? Why? Like, just learn to execute a modicum of patience. Get out of the freaking hopium mindset and learn how to analyze a stock and a fair value. All you got to do is wait a few weeks or a few months. You can buy a lot more shares with the same money. If that is what you're determined to do, take all your retirement, pay the early withdrawal fees, get the cash and go buy GameStop. If that's what you're determined to do, at least be intelligent about your entry. But no, these people were FOMOing in on the belief there was going to be a warrant squeeze. I'm just like, stop. I'm not the bad guy. I really want to see you succeed. But you got to learn some patience. Rash says, how do I join your Discord? There is a link in every video, Rash. The basic Discord is free. But if you scroll down on the sign up page, there are some levels of paid access you could opt for also. It's up to you. I have bought some silver. Yeah, chaotic good. I own SLV and Highcroft both. Highcroft is what I call a speculative bet. All right, I keep on saying I'm going to go spend some time with the wife. I need to go say hi to her before she goes to work. Yeah, so let's take a break, and I will come back, more than likely come back and see you guys in a couple hours. Let's go out with a motivational song for our Beyond brethren. And I wish you all very good trading over the next week and into the vote on the 19th. We'll see ya around, ladies and gentlemen.
By the dip, gotta hold our ground. We've been waiting for so long. Edgy's rain will soon be gone. A green candle up, a red candle down. By the dip, gotta hold our ground. Edgy's games are dead and gone.